He's sitting right next to me. I want to bring him in. Russell Investments Chief Market Strategist Stephen Wood. What do you expect out of these big tech giants, Apple, Twitter? Optimism?
I think so. I think there's going to be a bright spot in earnings in the Q3, and it's not going to come from much of the S&P 500. So I think where we're going to get firmer earnings is going to be in tech. I think we need to look at Apple and kind of back that out. I can't comment on a specific company, but when you back out Apple earnings, I think it's going to be a challenged third quarter, and one of the less dim spots is going to be in tech.
Less dim spot is going to be in tech. Okay, so you kind of sort of like technology, I guess, at this point.
And Steve,
yes, sir.
What are you getting from the conference calls that you're listening in on? We had a story in the paper yesterday that pointed to dimming expectations among CEOs for the outlook for growth in the U.S. and overseas. Are you picking up on any of that yourself?
I think we are. Well, this has been a top-line challenge environment for a long time. Companies have been pretty good at hitting their earnings numbers for a large number of quarters, pushing half a decade. But we really haven't seen any movement in revenue and sales, and I think that's really starting to push into the fourth quarter. But I think one of the bigger stories is going to be what happens in December with the Fed, and our job is not to be like a total nerd fest here talking about the Fed.
Yeah.
Oh, come on.
That's my one fear, John.
Actually, that is what his job is.
I know.
Is being a Fed nerd.
Fed nerd, and I'm with you. No, and
I just tweeted out #nerds on set with
Nerds on set. Book ended by nerds here. But I think the oil story, which has really challenged not only debt and equity space for the first 3 quarters, as we go into 2016, some of the benefits from oil will come into the economy, and I think that's going to be a little bit of a lift.
You think we're going to see it?
I think so. Well, if you're an energy company, you got to recognize all those losses in the first and second quarter. But if you're a consumer, you're not going to buy 12 months of gasoline in the first week of January. It takes you 12 months to pay 12 electric bills, to pay 12 energy bills. So I think as we move into this quarter, the fourth quarter, and the first quarter of next year, you begin to see some modest improvement based upon the drop in energy prices.
So Joe Ling just reported all these earnings numbers. What you reported, the one that I found most interesting was Ford's top line, that Ford beat expectations on its revenue growth. We have a car sales boom going on in this country right now. People aren't, they haven't recognized it.
Yeah.
But, well, actually, we had a front page story about it before the last Fed meeting. But I think that's an example of consumers finally starting to kick in and drive growth. I'll be interested to see what the other automakers have.
And that's an issue. If you look at China, too, the consumer story, the industrial story is well known in China, but the consumer story, and it's positive in China, is probably less well covered. And I think you get some of that affecting the United States as well.
Do you really believe that they're making that transition in China?
No, I do believe that they're making that transition. No matter what, they will make that transition. That's a government policy.
But do you believe the numbers behind that transition right now?
I think believe the numbers is a strong statement.
Okay.
So are you buying emerging markets? Are you buying China?
Oh, I would not say buying China right now. I think that the Chinese government is going to transition from that export-oriented, more consumer-based economy, and that is going to create challenges in commodity-based emerging markets. So it might be a little bit early on emerging markets, but valuations are starting to look attractive. They're beginning to bottom out in the cycle. We know that China's a 7%, 6.5% grower. That's going to happen. And the question is, where is it priced in emerging markets?
I'm trying to promote John's story because he's got a story on the front page of the Wall Street Journal today. And the central issue this week and this year will be the Federal Reserve. And I read every word in your story, and it basically shows a Fed that's a mess.
Well, Janet Yellen has a hard job on her hands on 2 fronts. One is that the economy is hard to read right now. You would expect inflation to be kicking in with unemployment coming down, and it hasn't been. So she's got a hard decision to make on the economy. A harder decision, or a harder job, is getting her 16 colleagues to agree with her. And as we lay out in the story, there's just a lot of people with different opinions.
All right.
John, tell people to read it because it's great.
And Stephen Wood, thank you. And Joe and Ken, thank you.